Good morning, good morning. Hey, Kevin, how are you? Oh, it seems like I was just on here. Hey, Tobias, how you doing? Hey, Ask, how you doing? Good morning, everyone. Here we go again. Oh boy. Welcome everyone to the Monday morning Globex session. Hey, William, Long Island. Long Island in the house. Asia's in the house. Hey, Ben, Jerry, happy Monday. Good to see you guys. Amsterdam. I like Amsterdam. I was there last year. It was fun. The only thing about Amsterdam is you've got to watch out so you don't get hit by a bicycle. That's- that was the only thing about Amsterdam. But it was a nice place. Nice people. 15 minutes from Miller Place. Oh man. Oh, I miss those days. Boy, a lot less discipline involved. Looks like we got some buying here in the morning. I haven't been to Paris in 2 years, but I enjoyed that city as well. That's the nice thing about being in the UK is you can travel really, really cheap. Raj, what's up, brother? Hey, Petra, how's how's my partner in crime? How you doing? Getting into lots of trouble? I hope you are. It's good to see you. Hey, John, how you doing? Back from your vacation? Now we got Thailand in the house. Good, good, good. So, what are we gonna do with this crazy market, folks? What are we gonna do with this crazy market? Are we gonna trade it? Does anybody know if they've got elevated margins? Because I have not checked my email this morning, which was really irresponsible of me. Let's go take a look and see what's shaking in this crazy market now. Inventory, we always start out doing the same thing every day. Go look at whether you have a candle chart or whether you have a TPO chart. Now, a lot of people ask, do you need a TPO chart to trade? And I say, no, you don't. It's nice to have, right? It's a tool, right? And it's a wonderful tool. It's like having those air wrenches if you're a mechanic, but a regular wrench will work as well. We just like TPO because it tells us where the inventory is priced really quickly. Now you can do the same thing using candle charts and volume profile. It's just not as in your face. So when you use a TPO chart, right away you see the blue stuff is where the majority of the cost basis is priced, right? So there's your inventory for the day. The majority of it is priced here, right? And we look at things like, oh, the close is here. The low is here and it has not tagged the close all night. Now, this is the close of Friday. So we say inventory is 100% long, which means every single trade is above Friday's close. Why is that important? Because number one, it tells us some information. It tells us that shorts are trapped between Friday's close and the overnight low. That space, that space that you see there is a short position. Pretty cool. Now, a lot of people will go, JJ, how do you know that's a short position? Well, unfortunately, for a number of years, almost a decade, I didn't really have a life. So all I did was sit and watch the charts. And as a person who used to trap shorts for a living, I know that the bid of any session, the low of any session, is where the bid from the short sellers are. Okay? Because they're trying to cover and they're short and they're trapped under here in this area here all the way down. There'll be different time frames of people who are trapped short because everyone was expecting the market to do this and then do that, so they got short. Now they changed economic policy again again on a weekend, right? So that created a gap up, so which is going to be very interesting because at 9 o'clock the pre-market for U.S. equities opens. That's 9 o'clock UK time, 10 o'clock European time. And when that happens, let's see if Apple and those stocks gap up. Be very curious to see that. I'll post it. So overnight inventory is 100% long. We're looking for a retracement. Now, here's the thing. Right? We're looking for a move down. As you can see on my 1 minute chart, we're not getting it, right? So first thing that you go, aha, okay? Because if inventory is long, we generally look for a move lower to correct it, right? But if you notice that the way this kooky thing is acting right now, that's not happening. So when you expect something to happen in a market and it doesn't happen, the market is kind of tapping you on the shoulder going, psst, 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 buddy, 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 buddy. Don't short it just yet, right? Because everybody wants to short this thing, right? Everybody wants to short because shorting is popular. It's sexy. They make movies about it. You know, you're a short seller. I think short sellers, all, get all the pretty girls. I don't know. Must be like that. I'm old, so I don't know about those things. But what I do know is everybody likes to short. The thing is, we don't want to short the front end of the move. We want to short when the sellers step in and start competing and push price down. Then we have some sort of confirmation that a short is a valid business plan, right? So right now, don't short the front end of it. This move here is for the traders who are long here to sell into for liquidation, right? This move is to create buying. This is like putting a lineup in front of a nightclub. It brings the people in, right? And you can see how there were sellers here, and once we took that level out, it created more buying. So the people who are long get to liquidate, right? Now, somebody was asking yesterday, why don't they all sell at the same time? Well, you don't want to scare the buyers away, right? You want those buyers coming in. Right? You want them coming in so you can sell them more at higher prices for a longer period of time, right? That's the goal, to sell as much as you can for as long as you can at the highest prices you can. That's good business. Now, 54, 64 and 3/4, that level right there, right? Let's just call it 54.65, right? Nice round number. Let's see if we accept above it or below it as the session goes on. Because if we get above it, then we'll be gunning for that high up here at that 55.20, and that's from, I think, the 14th? No, the 8th, sorry. Right? If we take that high out, it's going to create some buying because every single swing short is going to have their stop at 55.20, okay? So that's a little bit of market intelligence for those traders who take bigger positions and trade longer time frames. Now for us, let's go take a look at the TPO chart. And we made an attempt at the overnight high, and then of course they came in and started selling. The balance levels I'm using, I came up with when the market opened on the gap. I did a session, it's in the YouTube history, right? And the gap was created here, right? So there's our gap, and our open was up here. So I used this level as our, I used those two highs, that low and that low, and the fact that we couldn't get to that low. And I used that as a balance, double it to the downside, double it to the upside. So this is 2 times profit, and this is 2 times discount. Okay? Your Kevin, your margin is the same? Thank you. Raj, no emails from AMP? So VWAP is, where's VWAP? VWAP's down here at 54.35 and a quarter, right? You could do that, right? You could use the entire Thursday and Friday range. You could do that. But I want to have smaller ranges, Tobias, because I'm a day trader, right? So what I like to do, right? The trades I love are trades like this, what we call the look below and fail, right? When the market looks below 54, 50, 44 and a half and fails, I'll buy some at 45, 46, put my stop at 44, and then sell a little bit before 52, right? JJ, from the opening, I use my balance zone to your discount zone. Is my your zones don't have to be the same as mine, Tersey. Your zones don't have to be the same as mine. All you guys want to do, right, is look at the reaction of the zone, because those are the trades you want. See, look below and fail. Now, once you learn how to go long, and I know this sounds crazy, but learning how to go long and learning when to spot your competition from other sellers. Because remember, as soon as you go long, you're a seller. You're a merchant that has inventory, right? So you're going to have competition from other merchants, right? So say you were long on this look below and fail. Let's make this a little bigger here, right? Now we're in distribution, right? We're just going to take this product and sell it up here, okay? So say you went long on this look below and fail. And there's another one here too. There's 2 in a row, right? If you went long at, say, 46 and put your stop at 44, your target is, what is that level? Let me just double check so I don't give wrong information. That's 54.51 half, okay? So if I'm going long, and I want, I'm going to go long and I'm looking for the market to go to 54.51 half. Now, here's the thing. There, you saw that there was a seller because that's when the selling started in this group of candles. So if I'm long at 46 with my stop at 44, once I get up to 50, I know there's going to be a seller. So I want to front run that seller and get out of my trade. The second time it happens, we go through that seller up to 51. So as you take this trade, the more times you take it, you get what we call situational awareness and you get comfortable in those trades. But the more times you take it, the more you'll realize. That's why I want people, when they're first learning how to trade, I want you to sell into the strength, right? Everybody wants to buy it at 45 and sell it at 66. But I don't think there's anything wrong with making 3 to 4 points on 2 to 3, 3 to 4 contracts, right? Learn how to make money, learn how to keep your money, and then grow as your skill grows, right? Yeah, front running is the spice of life, right? Front running is a beautiful thing because you get out of your position before they can take your customer, right? That's what we want. We want, and then what that does, the really nice thing about that is it teaches you how to spot sellers competing because there's nothing like being able to spot sellers competing if you're a seller. So once you learn how to do that, now the look above and fail, right? It's a bit of a harder trade. See, it happened here. We looked above and failed, but we couldn't get any lower. Here, we looked above and failed, and we couldn't get any lower. So you have to learn that when the selling stops, you got to get out of your trade. It's really, really important that you get out of your trades, right? If the selling goes away, right? There is no reason to be in a trade if the sellers are gone. So if, say you had shorted when it came down here at 40, 43, right? And you put some bids down here at 42, and there's no way you're going to get a fill. The market's trying to tell you there's nothing for sale. See, large traders, instead of using stuff, what they'll do is they'll buy a quantity of stuff, and then they'll put sell orders out. And as the market goes up, if it does not execute those sell orders, they know that somebody's front running those sell orders. Know what I mean? So, and same thing, if you're short, right? Say you're short, you put some buy orders in, and as the market goes down, if those buy orders do not get executed, you know, hey, there's not enough supply, right? What you want to do, it's not the color of the candle, Luke. For example, say we were doing a look above and fail of this level, right? What is this level? 54.65 half? Okay. Let's use this as an example, okay? Okay. We want, see, everybody tries to get the high. Leave that alone. When the market comes back underneath 65 and a half, you sell 64, 63, put your stop here, and then you put your buy orders down here. So when the market goes down, it hits your buy order. I don't really worry about the color of the candle or the wick or whatever else the opposite of a wick is, right? I don't care about that. I care about, can it trade over this level? If it can't, then I know, oh, right? There's a seller, and the sellers are competing because the top of the candles are going lower. That means the sellers are competing. For those of you who use a trend line, right? That's why you get that trend line, right? You see, you get that trend line because the sellers are lowering the price that they're willing to sell to capture the buying, and they're going to do so until we get to the cost basis, which is here, right? See? So they can sell it all the way down, right? They can sell the market all the way down to cost basis and still be in profit. Don't, yeah, if they get front ran, they're just going to hit the bids, right? It's not market orders. Professional traders don't use market orders to buy us. So say I sell you 20 contracts at 65, okay? And then you go to sell them at 64, I'm going to hit the 63s. You go 63, I'll hit the 62s. right? And it's all electronically done now, so their execution is very quick. So you don't really have to worry about that. Just keep it simple. Don't overcomplicate everything, right? When you overcomplicate things, it's going to screw up your execution. Right? And I don't mean to be, I don't want to sound rude or anything like that, but retail traders are really taught to overcomplicate things. Very simple. There's a seller here, I sell here, I put my stop above there. Why? Because if that seller goes away, I'm done, right? There's a business reason for a trade, right? What I'm trying to do, Tobias, is like you've watched something over the years. What I'm trying to do is I'm trying to make it simple for people who haven't been watching it for years, right? Simple, 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 right? There's a seller here, right? The sellers are competing. Now, here, they found some buying under 58, so they stopped. And now they're raising their prices, right? Right? So what I'm trying to do, the reason that I do this is I want regular people who haven't worked in the business to be able to trade and make some money, pay their bills, right? And not lose all their money with all these crazy ideas, where they have to hold trades for 20 points or, all of this stuff that frankly just gets you into trouble, right? Now, I'm not saying don't hold trades for 20 points, but do you have the skill to do it, right? Do you have the skill? Have you built the skill to do it? Like if I put you in Lewis Hamilton's F1 Ferrari, could you even get it to move, right? Everybody wants to drive it, but hey, we got to be realistic, right? And I would rather make $500 a day consistently, right? Which is 10 grand a month, than to lose, right? To always be searching and losing and jumping all over the place. Because that emotional burden that it places on a trader is just horrific. It's really, really not good, right? Right? So now, this is another thing, another big thing, okay? When do we do business, right? When do we do business? So now we can see that they're taking this and they're selling it here, right? If I drew a volume profile, just in this area here, you would see that, look, there are the positions, right? There's a position here and a position here, and we are distributing. That's why when we come down here, we magically stop selling at 58. My pleasure, Tobias. Have a good one, right? This is distribution. I don't use footprint charts. I have one footprint chart video that I use as a teaching tool because my buddy Funk Trader made it for me and it's a nice chart and it shows how a low is created. I would highly recommend that you just use a 1 minute candle chart because the 1 minute candle chart tells you when to get into the trade, right? Now, here's the thing. Everybody wants the magic bullet, right? Everybody wants that holy grail, right? What I find with footprint charts is, well, number one, that traders tend to overtrade using them, right? It's very common. They're always overtrading, right? The other thing is they get lost and they're shorting in the wrong place, looking at things, and then they use weird stuff like unfinished business, right? Unfinished business to me means you have to go to the bathroom, right? Once a sell order is complete, like the market came down here, the business is finished here. That's not unfinished business, right? The sell orders are complete and the market goes back up looking for supply. So all of those things are very, very, very confusing for retail traders because they've never worked on a trade desk, so they don't know what's going on, right? And you throw terms at them like unfinished business and incomplete auctions, which is all BS, right? I happen to know that if I'm working an order to sell 5,000 contracts, and then I get to the end of that order, that business is concluded, right? You know, I always push for simplicity, right? Here you can clearly see the sell orders are done underneath 44. Simple. Here you can see there's selling competition at 65. Corey, you don't need to see more. Why do you need to see more? What edge does that give you? It's not making you any more money. I can guarantee you that. Right? Just keep it simple, man. Just keep it simple. It lets you see a lot of information that you cannot use. Right? It lets you see a lot more that's useless. That's not actually going to help you trade. If you just, I know it sounds really horrible, but if you just do exactly what I tell you to do, your life will be a lot simpler and you'll actually start making money. Well, why don't you DM me, Corey? Because I don't want to. You can't see it on the 1 minute because you haven't trained yourself to see it. It's really simple. Why don't you DM me like you did last time? Because we'll have a real conversation. Okay? Now, some people really like to overcomplicate things, right? And you go ahead. You're not going to be profitable, right? But go ahead. Now we're putting it on sale as London starts to open in 4 minutes, right? You can see that the sellers are competing under 58. It does not take a rocket scientist to figure that out, right? If I gave you a really simple way of doing something, why would you overcomplicate it, right? Because somebody has sold you that chart and told you this, this, and this, right? And that's okay, right? But people love to overcomplicate it, which is great for us because we love to take their money, right? You know, there's a saying where I come from, if you can't dazzle them with your brilliance, baffle them with your BS. And it is one of the most greatest things in trading, right? If you keep people confused, right, they'll always be looking for something. I want more information, right? Why do you need more information? What, are you writing a paper? Or do you actually want to make money, right? Just keep it simple, right? If you overload yourself with information, you're not going to be a better trader. I can guarantee it. Because you don't have the skill to process all of that information in the heat of battle. It's just a fact. It's been proven over and over and over again. I take traders, they come in my coaching, and I look at their charts, and they got so much crap on their chart, right? They got 16 charts up, all different time frames, right? And they're just mucking, going crazy. I get all that crap off them. I get them to look at one chart. Look at that. Now they don't need to sell under 58.5. How simple is that? How much more complicated do you want to make it? Right? Look. Right? How much more simple can that be? The offer is lifting over 58.5. Right? When the offer comes underneath, it means that the sellers are competing. When the offer is moving higher, it means the sellers don't have to compete. When we get to this level, they're going to be sellers, so don't trade it because it's choppy. Right? Every time I have these sessions, someone will come up and say, well, you got to use this chart and you got to use this chart. And this gives you more information. Yeah, but are you consistently profitable? Right? Are you consistently profitable and are you managing risk? The way I teach you guys to trade is that your risk is actually put into your trades, into your trade setup because there is a business reason for the trade to work. So once that business reason goes, there's no reason for you to be in the trade. Right? Then you don't need to go sit on Dr. Phil's couch with all this trading psychology. Right? The reason people don't understand that is because they haven't worked in the business and they don't understand that there is a business reason for the trade to work. Right? If you think trading is random, I've got some oceanfront property in Arizona to sell you. It's beautiful. Just keep it simple. Right? Keep it simple. Look, sellers are competing. We are going to come down now to this cost basis. Once we get to that cost basis here, right? So once we get down here into this cost basis, the selling should slow down. If the selling doesn't slow down, we'll break the 52s and come down into the bottom of the cost basis because the selling is highly competitive and they're marking down price. Remember, folks, it's a market and there are business reasons that trades occur. Right? It's a market. A market is there to sell you goods. Right? Most people don't even realize that we're selling them things. That's the beauty of capital markets. Right? Investment bankers create product, salesmen sell it, and traders move it out the door, like truck drivers. Right? And the beauty of it is, right? The beauty of it is, most people don't even know they're being sold stuff. And they just keep buying. Right? And trust me when I say this, I've sold you guys billions of shares of stock. It's just, you know, if not for that, my clients would not own their own planes. Right? And they wouldn't have 3 or 4 houses. You know. What I'm saying is, if you want to learn how a market works, learn from someone who's sold millions of shares of stock. You know, they understand how you guys think, and that's what I'm trying to do now, is use that information for good rather than selling you worthless stock, which is a hell of a lot easier than teaching people. It's a lot easier to take people's money than to actually teach them how not to get their money taken. It's a lot easier because every time you say something, people will fight you and fight you and fight you, right? Look, we came right down to 54.51, and look, we stopped selling and the offer lifted, right? We knew that it would. So if you were short 47, you'd be covering, sorry, if you were short 57, 56, you'd start covering the 51s. Does that make sense? Because that's where the product is priced. Make sense? So why would you sell it underneath your cost basis? Is if this is what you paid for your goods, you're going to put it on sale. When you put it on sale, that draws buyers in and you can raise prices. Make sense? Yes? No? It's really simple. That's why people tend to like to overcomplicate it. This way you know where to cover, right? You know where to cover, right? Instead of like, oh, now it's taking my stop at break even. What was the point of even putting on the trade, right? If you were short 57, 56, and you didn't cover at 51 and a half, 52, right? Yeah, it bounced exactly at the line that I drew because the cost basis is right here, my friend. Right here. Now, what kind of fancy software do you need to know that? Right? We're selling this stuff. We put it on sale. The sale brought in buyers so we can raise price. Now, once we get up to this area here, we know that they're going to be sellers because they were constant sellers here. So had you gone long, say 53, start selling them here, right? Just use common sense, ladies and gentlemen. I know it's not popular. I know there's no chart that I'm selling you, right? All you need is a 1 minute candle chart, right? All you need is a 1 minute candle chart. You don't need to overcomplicate this stuff. Just keep it simple, right? And that's what we teach you in the room. We teach you how to keep it simple. Why do we want you to keep your analysis simple? So you can actually trade and execute without overcomplications. The more you overcomplicate stuff, the crappier trading is going to be. Because in the heat of battle, you're going to forget things. You're going to be thinking about too many things, right? You're going to screw things up. Guaranteed, right? Keep your analysis simple. Like I look at, X and places, and you see people and they've got a 4-page trade plan for the next day. I'm like, you've just written a doctoral thesis. Are you going to remember all of that when you're actually in a trade? What's the point? Find out where the buyers are, find out where the sellers are, right? And do I have an execution plan that takes advantage of this situation? Eh? Think about that. Right? Does your execution plan take advantage of the situation? And does it also manage your risk? If it doesn't, throw it away. Don't take the trade. If the trade doesn't make business sense and if you can't execute it properly and manage your risk and then you end up hoping and praying that the trade works out and not using stops and just all those really bad, undisciplined things, what's the point? right? You have to have discipline. You have to have a plan and use a simple plan, right? Because at the end of it all, you just want to make money, don't you? We'll just keep it simple. Like last night, I was on here and I was telling people you want to watch the seller, right? And think like a seller. And some guy piped up and he's like, "Why don't you want to think like a buyer? You want to think like a buyer." And I'm like, "If I say black, you say white. If I say day, you say night." Right? They, they just really they want to complete, just to take the opposite side of things, right? Just follow simple instructions, right? If I tell you to walk to the end of the street and turn left, don't go there and turn right. See? And we told you that there were going to be sellers here, didn't we? So the market went right to where the sellers engaged before. See how simple that is? Why would you need anything else if you can see that right there? Why would you need any other kind of system? Everything is being told to you right here. All you got to do is pay attention. Any questions? We have time. And the key to this is repetition. Just keep doing the same thing. Don't keep changing your strategy. Find one thing and get a sample size. What does that mean? Do it 500 to 1,000 times. That's the boring part, where you got to do this over and over and over again, right? So you can get familiar with the trades. Now, let's see. If we come back into cost basis, right, I'll look for a look below and fail of 44 and a half, right? If we can't hold 44 and a half, then you'd look for a short down to VWAP. Okay? Guys in the room, you guys still awake? Just checking. All right. I know it's Monday morning. First coffee? Yeah. I know the feeling, Moran. I know the feeling. And price action like this, right? Price action like this and what's happening here, it's just, I won't trade it, right? This it would be a look below and fail at 51 half. I like to wait till the edges of the zone, RC, especially on a Monday morning, right? I've only been watching the market for, I don't know, 45 minutes. So I am a big believer in not over trading. I spend a lot of time watching. Oh, it's past. Oh, are you in the States? I thought you were in Europe or in the UK. Yeah, that's true. What is it, 3 in the morning? 10 after 3, right? And when you first start out, what you really want to do is wait for this trade here. This is a look below and fail at 51 half. It's just at the edges you have the most probability for a move back into the middle. AGL, yeah, 3 more, 312. I'll wrap it up soon. So now we're back in cost basis. Uh, you know what, Terzi? I didn't see what you're seeing, so I can't judge your reaction and say whether it's FOMO or whether it's a real trade, right? You might have actually seen a real trade, right? I can't comment on that unless you and I are looking at the same thing at the same time. You know what I mean? They might very well have been. So let's see what we do when we come down to this 44 and a half, right? So if I don't know what you're looking at, it's hard for me to judge it. Have a good one, GL. Sure. So can I explain the concept of shorts trying to cover being buyers? So what is a long trade? A long trade is when you buy something, right? You actually acquire the product and you want to sell it at a higher price for profit. So when you short something, you sell something that you don't own. Okay? So when you sell something that you don't own, hoping the price goes lower, you need to buy it back to close that trade. Does that make sense? So if I was short, say at 56, right? If I was short 56, I need to replace those contracts. So I'm going to put buy orders down here to cover that trade, to close, right? Does that make sense? So when the shorts come in, that's buying. Well, Corey, because of experience. How do I know the difference? Because I'm telling you. You're just going to have to believe me because I've been doing this for 33 years and I've been trapping shorts. I get paid a lot of money to do short squeezes. The first people to come in and buy, Corey, are short sellers who are covering. Think about it. Why? Who comes in? Who is the first person to buy a market? Because they're taking off risk. They're closing a position. They're taking profits, right? I don't know what a liquidity sweep is. That sounds very fancy. I have no idea what a liquidity sweep is. You must be on CNBC. I don't know. People like that also use terms like nebulous. I don't know, but how does that make you money? Right? You don't need to understand it. Right? You guys, you don't need to understand it. Look, do you guys want to make money or do you guys want to pontificate? Right? And I'm saying this with love. Right? Do you guys want to make money and put money in your account, or do you actually want, or do you guys want to pontificate and sound smart? Because there's two camps in this whole trading thing, right? A sweep of the order book. How are you going to make money from that, William? It sounds really freaking cool. I'm sweeping liquidity, order book, yada yada yada. How am I going to actually take that and make money? Right? Where do I put my buy order? Where do I like how do I trade this liquidity sweep? Is it tradable? What is the business that I apply to make money from that information? Right? I'm just trying to keep you guys from like this whole CNBC pontification, I want to sound smart thing, right? This is the BS that is spewed all over social media. Liquidity sweeps, unfinished business, unfinished auctions, uh, sweeping the order book, um, Jesus, all of this stuff, right? Where do I put my buy order? Dark pools, right? Swimming pools, movie stars, right? The only kind of pool I'm interested in is a nice swimming pool, right? I don't know what that is. Crop circles, right? Just keep it frickin' simple, you guys, right? All of the stuff that you guys have been talking about is not going to help you make money. None of that is going to help you make money. None of that is going to keep you from blowing up accounts. That is useless information, right? Where do I put my buy order? Where do I put my stop? What is the business reason for the trade? Right? When do I get out of the trade? When does the business not support the trade? Wouldn't you rather know that? Right? Instead of talking about dark pools and, right, sweep the whole order block. What the hell does that even mean? If you said that stuff on a trade desk, they would laugh you off a trade desk. Right? Right? Don't buy into all that BS. Keep it simple, folks. Make some money, manage your risk, enjoy your life. You know what I mean? Right? Now, where's the seller going to be? Seller's going to be right there. Right? So if you're long, there's going to be sellers up at 55, 56. Now, where's the order book? Where's the liquidity? What did you call it? The liquidity swifter? The liquidity mop? Right? Who cares? You guys should be worrying about liquidity if you're trading 5,000 contracts. Are you trading 5,000 E-minis? Then what the hell are you guys talking about liquidity for? Right? Like, seriously. Right? I'm trading 3 micros, and I'm talking about liquidity. Well, you see. Right. When short covering, yeah, it pops and comes back down because the sellers reinitiate, Jill. Right? Look, I told you there'd be a seller at 56. Bada boom, there they are. There's your liquidity sweep, right? Right there. Look. Now, that's information you can use, right? And as Russell Peters says, take it and go, right? Information you can use, not BS, double talk, right? I'm here to cut through all the BS and tell you where you should expect to sell if you're long, right? Now, if the sellers at 56 see buyers, they are going to move their selling price up to here and then up to 58 and then the top of that candle. But there were sellers here before, right? I'd say right here is where the next sellers are, right? How much more simple does it need to be? Now I could write a bunch of double talk, right? And talk about things that don't make you any money. But what's the point of that? Right? Most of these things are run by people who want to sound smart and they want to keep you paying, they want you to keep paying them monthly fees. Right? You're never actually going to make any money. They're just going to keep spouting BS at you. Right? I want to teach you, and my goal is for you to say, JJ, I'm making money. I'm off on my own now. Right? That's what I want for people. Right? I don't want to charge you forever. Right? Even in my coaching, my one-on-one coaching, we charge one fee. It's for life. So I teach you how to trade. You go make money. If you have trouble, I'm available to you whenever you need. Right? 5 years down the road, 10 years down the road, right? You don't get charged over and over and over and over again with all these reoccurring fees, right? Keep it simple. Learn a little bit about the business. You don't have to learn market making. All you have to understand is there's a wholesale business going on. And see, you knew that there was going to be a seller at 56, right? So we looked above 56 and now the sellers are competing. We're going to come back down to 51, 51 and a half, right? Simple. There's no need for double talk. Where's the liquidity? What do you guys, I don't even know the words that you guys use, right? If you're trading 3 micros, 5 minis, you don't need to worry about liquidity, okay? You're good. Get that word, take that word and throw it out. Do you guys know what liquidity is? Liquidity is the ability to transact size without adversely affecting price. So if I need to sell 1,000 E-minis, can I move those contracts out without knocking the price down? Or do I have to split that order up and work it? Right? I need to buy 5 million shares of a stock. Can I do so without moving the price up on myself? That's what liquidity means. Right? It has no place in retail trading. It's just a word people use to sound smart. Keep it simple, folks. Make your money and enjoy your life, right? And the days that you don't make money, don't blow up your accounts, okay? Right? In the immortal words of Red Foreman, don't be a dumbass, okay? Keep it simple. Any tips for smart money management? Yes, don't put on a trade unless it makes business sense, right? And if you want to sweep something, sweep your backyard. Very good, Michael. Do I look at higher time frames? Yes, the risk management should be built into your trade. So for example, Terzi, if you were going long here, your stop would be here. Because if the sellers need to put the price on sale underneath 44 and a half, why in God's name would you be long 46? I do look at higher time frames. That's the very first thing I do when we look at come in the morning, William. So here we could see, right? So this is a daily, right? Here's a weekly with my levels, right? And you can see that we came down to my 48.28 quarter, tagged it, bounced off of it, right? And now we're in this blue zone here, right? Right? I do the same levels for NQ, right? I like to day trade because I like to, put on a couple of trades, make money or not make money, and then go away, right? I don't like to be in a trade for the whole day, especially not with these ranges, right? And the amount of volatility, right? We're going through some massive changes. Wouldn't it be a hoot after all of this if we just went right back to the normal, right? What we have going on, ladies and gentlemen, this is a margin reset. And all we've done is if we've reset the cost basis. All we did was we came back, and what we've done is we've taken all the people, just like in COVID times, right? We flushed them all back up. All we're doing is resetting the cost basis, and people who bought on margin get flushed out, right back up, right? This is the ES, of course, so it's not indicative of investment positions. But if you go and you look at the SPY, it's the same thing. Anyone who is long on credit, boom, right? You flush all those suckers out into these bids, reset the cost basis, back to work. Inventory tells me to look for shorts and longs. And if the market can't get above, say, 537 on the SPY, or it does a look above and fail, I will let you go. Have a wonderful, wonderful morning. Stay out of trouble. Be smart out there, okay? Come visit us at Microefutures. We've got that 7-day trial. I guarantee you, if you listen, you'll learn more in 7 days than anywhere else. Guaranteed. Thanks, everyone. Stay safe out there. Bye for now.